Hello, everyone, and welcome back to the J22 Report. I'm your host, Johnnie Market. You all know that drill. Hit that like button if you already haven't. Let's get those algorithms going. And subscribe if you already haven't. So, anyway, video today. Couple of things I wanted to get into. First, gold had a nice day. Went up $14-15. Sold down to 6 in later in the selling day. But here we go. And I can't stress this enough because there's so many bad fundamental channels. And I don't know any really good fundamental analyst. I hear these dumb things like spot versus paper or paper versus physical, which none of that is like. Well, I mean, some of it is true with the GLD and not having gold. But in terms of spot price and physical price, that's not true at all. Dumb people say that. Precious metals is manipulated. That's another dumb one. It's not manipulated in any meaningful, or as they say in accounting, material matter. Is there like spoofing where it's like $3 difference or a bid ask difference of 5? I mean, that happens in every market, but it's not. It's not manipulated in any manner. It's a sales trick. All it is to get you to buy at any price. I can't harp that enough as someone who used to work in the business. But anyway, today, new home sales month over month declined by 3%. The forecast was 3%. So all those new homes being built to young people, well, young people are broke, so they can't buy those homes. Prices are too high. They have to come down. It's not interest rates. It's not anything. It's the actual price is too high, and no amount of credits or 5% commission-free things going to be able to change that. Prices are too high. The actual price has to come down. So that's what it is. We do have more data this week. But yeah, that's why gold was up. Stock market's down. And the other, so yeah, that's basically what I want to say. And the funny thing is, I wanted to get into also one thing that's a myth is they say the stock market's not the economy. It's not true. It follows, if you look at it, 1970s, the misery index, anemic to negative growth. Stock market didn't do well. 2000s through 2010s, anemic to negative growth. 2010s, positive to real growth. It's really, it really is. People admit that quote unquote real economy, the average person is doing poorly, but businesses are doing well. The people are not doing well, but the businesses quote unquote are, of course. So yeah, that's another thing I wanted to say. I mean, that's all going to change, but excuse me, but anyway, just getting that voice. I do this because there's so many bad fundamentals analysts, and I have to harp on what gold needs to go on a bull market is slow anemic growth, and the government data matters. No one cares about shadow stats. No one cares about this stuff matters. Is shadow stats more accurate, a more of a reflection of what's going on? Yeah, it is. But it doesn't look how it's traded. I remember when I used to work, do podcasts on other channels. I remember interviewing Gregory Manarino, just taking this as an example and asking when's inflation going to show up. And he's like, you're already seeing it at the store, but the only thing is, what you see at the store doesn't necessarily show up in the trading room. And that's one thing I learned. I said, you can't really look at the real economy or whatnot when investing. You have to look at things that are going to show up in Wall Street and in their trading room. It's Wall Street's in for a rude awakening, but that's not happening this year. So, second of all, I went into this article also. It says, millennials hoarding more gold than boomers and Gen X's. So I have to say, a score one for the millennials. I hear all this stuff about millennials being babies or uh, not knowing what's going on. I'm a millennial myself, but if you look it down to it, millennials are smarter than boomers and Xers because one, they hoard more gold than boomers and Xers. The only problem is in this article, they hoard more of the GLD, and that needs to change for everyone and start buying the actual physical gold as a percentage of your portfolio. And the other thing, I'll post these two articles. The younger generations, they're also smarter because they're less likely to take the poison shots. Hesitancy is higher among them than older adults. So, score one for the younger generation. They get a slam dunk over the boomers and Gen Xers when it comes to street smarts. People talk EQ and all that stuff. Growing up, I was a white basketball player on the streets. Played against a lot of people on the streets. I didn't grow up on the streets, but played against people. And so I use book smart and street smart instead of EQ and what IQ or whatnot. So the younger generations are much more street smart. They're not taking the poison shots, less likely to, and more likely to buy gold. So pretty cool. And yeah, that's all I have for today. I hope you like this video and subscribe, and I will see you next video.